All right, welcome back from break. Thank you for joining us for the final two sessions in the track this afternoon. That was a really interesting perspective from TransUnion. And as a perfect follow-on to it, I want to introduce Steve Ely and the panel that he's assembled here this afternoon. So Steve has a lot of experience in lending and with the bureaus. He used to work for Equifax and is the CEO now of eCredable. And he's assembled a panel here that'll have the perspective of both a bureau and lenders. And so with that, Steve, I'll introduce you and ask you to take it over.
Great. Thank you, Eric. Appreciate the opportunity here. So we're going to talk about alternative lending in action. So some of the concepts that you just saw Jason go through are fantastic. He went through an extraordinary amount of detail on how credit scoring model works, how lenders use it, and how it's in the marketplace. We're going to come from a slightly different perspective here and talk specifically how alternative data is being used in various lending platforms. So with that, I've spent 15 years in the credit reporting industry. I had another career a long time before that in technology, but spent 7 years at Equifax. I ran the B2C business there for quite some time, so learned a lot about consumer behavior and how to market to consumers, how consumers perceive credit and whatnot. Left Equifax to help build eCredable. We're an alternative credit bureau that's basically trying to help small business owners and consumers enter the credit system by sharing things like phone, internet, utility bills. So we started working with Urginet over 2.5 years ago now to get access to this kind of data so that we can help get that data into those kind of credit files and let those people join the credit economy. So Harry's here with us today from Dun & Bradstreet. He's also spent the past 15 years in the credit reporting industry at Dun & Bradstreet. And is really today evaluating Urginet to see if you can't leverage this technology for his business. Harry's in the kind of direct to small business owner business. At D&B, they call that credit on self. So you can help small business owners create a better credit profile for themselves. Jeremy, we didn't cross over too much at our time at Equifax. He was coming and I was going. But he's got a long history at Equifax and in the credit industry, worked at Experian. Done a lot of work around modeling, understands a lot about credit data, and is currently leading a vertical focus on banking and lending, which is a very big piece of the Equifax business. And then finally, we have Nipun here from Kabbage. Kabbage is a local success story, as many of you know, that's been really lending to businesses and small business owners based upon the back of how they run their business and how they manage their cash flow. So let's talk about three things before we let each one of these guys talk in detail about their businesses. I want to talk about the consumer market. I'm going to just kind of frame up the consumer market. I want to frame up the commercial market, and then talk about how people are using different solutions to address these markets. I don't want to go into too much detail because you already had a lot of that in the prior session. But here's one way to think about the consumer market. This wheel you see here kind of represents the overall ecosystem. And at the center of the entire ecosystem are reports and scores. I don't care how you talk about credit or who's doing what with what. If you don't have quality reports and scores, the ecosystem doesn't work. It's so dependent upon quality data, reports and scores to work efficiently that you just have to kind of focus on that. There's a lot of people that feed the ecosystem, but the heart of it sits with the national credit bureaus. If you don't have companies like Equifax and TransUnion, Experian, managing this data on a national scale, it just doesn't work very efficiently. So they're kind of the keystone, if you will. Then you can supplement that with alternative bureaus. Jason talked about their acquisition of Factor Trust. That's a payday lending data predominantly that's using in their model. You're going to hear Jeremy talk about Data X, which is what Equifax is using to complement theirs. Experian acquired Clarity. So you can see an alternative bureau thing up here. All the alternative bureaus are gone. They've all been acquired. And so that's kind of just the nature of the industry. Then you've got these marketers out there. It's so funny how consumers look at companies like Credit Karma and they think they're a credit bureau doing something with credit. They don't have anything to do with credit. They're a marketing company. They're basically reaching out to consumer and reselling reports from Equifax as an example with a score and then saying to the consumer, you can come here and get a free report and a free score and monitor that. And we're going to help you monitor that. And as you improve your score over time, you're going to qualify for more offers. And that's the name of that game. And then, of course, we have the all-important lenders, whether they're underwriting credit cards or auto loans or personal loans or whatever it might be. What eCredable is trying to do, the company that I'm the CEO of, is basically help consumers participate more, get more data into the ecosystem so they can get better terms and rates. The score distribution you see here comes from FICO. It kind of mirrors what Jason was saying earlier in terms of how different people fit into different score bands. The alternative data market is largely focused on the people to the left of the dotted line. I like to call that the credit chasm. All those people to the left of the dotted line are trying to get to the right of the dotted line and get as far over to the right as they possibly can, as fast as they can, but that's hard to do sometimes. And so when you think about this whole alternative credit data makeup, the no-file consumer, was kind of historically off limits, but now with alternative data, there's a lot of lenders trying to figure out, how do I get to that 26 million? They're not all creditworthy. You just don't load those 26 million people in the system and give them all loans, but some of them are. And same thing with thin file. And so alternative data is simply trying to address all these different use cases and how can you be a part of this ecosystem. If you get all the way over to the far right with super prime consumers, alternative data is just not that interesting because those people have rich credit scores, they have rich credit files. If you look at commercial credit, the market's smaller, but it's a pretty significant market. There's about 30 million companies in the United States. The vast majority of them don't have any data in their credit files. Because the way that the business credit reporting ecosystem works is very different than the consumer reporting ecosystem. The consumer reporting ecosystem is highly regulated. Everybody knows there's 3 big bureaus. We as consumers know we have to manage our data at Equifax, at TransUnion, Experian. You got to pay attention to that. And so we know how to do that. Nobody can access our consumer report without our permission. They need permissible purpose in order to access the report. Commercial world, it is the Wild Wild West. Anything goes. The bureaus make up their own rules. The lenders make up a lot of their own rules. Who reports to those bureaus, you may or may not ever know. And so it's just a little bit different. And so the startups here in this, if you kind of break it into 3 companies, startups, young companies, and then larger companies, the startup companies don't really have any data in the credit bureaus. There's no data about them being reported to the bureaus. That's one of the problems we're trying to solve by leveraging Urginet to get to phone, internet, utility bills and help startups get started in the business credit bureau. Young companies typically have very limited data. They may have one business credit card, maybe one other trade reference. They just don't have very thick files, so they're kind of hard to score. Then you've got the larger, more mature companies that do have bigger, thicker files, and those are the companies that focus intently with companies like Dun & Bradstreet because they're trying to say, how can I get the best report I possibly can to get the best terms that I possibly can? So that's just one way to think about that, a little bit simpler overview than what we talked about before. So with that, let me introduce Harry, who's going to talk about what he's doing at Dun & Bradstreet.
Thank you, Steve. So D&B, I've been in the business development part of the small business division there for 15 years, and position ourselves as small business advocates that are trying to level the playing field for small business owners to ultimately be able to grow their business and have the same type of access to capital that Honeywell has, and be able to manage their working capital challenges, be able to hire for growth when they, a manufacturer gets a yes from a national retailer like Walmart or Target to be able to distribute their goods, regionally at first and then nationwide. There's an immediate need for capital to be able to hurry up and scale. There's often a delay in terms of when they're going to get paid from the large enterprise, which typically will pay a smaller business a little bit later just because they can. And the small business is never going to say no because you don't turn business down. And they also know that the risk of them going delinquent is near zero. They're going to get paid. It's just a matter of when. So my mission, our mission at D&B is ultimately to open more doors for small business owners, to get them access to cheaper capital, to try to level the playing field so that they can ultimately grow their business just like large companies are able to go raise funds, invest, and then scale more quickly. So we partner with Pepperdine University to do a survey for every quarter for the last 7 or 8 years, measuring small businesses and then mid-sized businesses. So we'll say for the survey purposes, it's 5 million and under are small businesses, 5 to 100 million are mid-sized businesses. And what we're seeing over the last certainly 3 to 5 years in particular is a divergent trend where mid-sized businesses are more likely to get capital. They're having greater success rates at being able to hire, purchase equipment, and invest capital for growth, where small businesses are seeing the opposite happen. And so we're seeing a greater percentage of them starting to turn to a growing industry of Kabbage and other lenders. They're starting to go to online lenders, starting to go to local community banks, and all of those rates are starting to increase while the loans from traditional lenders are going down. And all of this is due in large part to the thin file sort of issue, which, in the previous presentation, we labeled the underbanked, right? We just don't have a lot of data. We don't have a lot of, whether it's a startup or it's somebody that's been trying to get frequent flyer points and running their business on their personal credit card, or started by getting a friends and family round of money, which is sitting in a personal checking account that they're starting to get their business off the ground with. None of that gets reflected in your Dun & Bradstreet file. So mission number one is, how do I identify that a business was born, issue a DUNS number for them, which is sort of a social security number for that business, which becomes the magnet to now start collecting other information, right? When they do get extended credit, and it does happen to be from one of the companies that does automatically report to Dun & Bradstreet, that's reflected in there. Utility companies typically are not so proactive about saying, hey, let me get my data in here so I can help my customers start to build their business credit file. So it's incumbent upon us to sort of figure out a way to put this tool and this mechanism in front of them. I think what's interesting here and where Urgent has sort of changed the dynamics of the game for small business owners is that data has always been typically viewed as being owned by the utility company. It's their data. This is how much electric was provided, water was consumed. Here's how much they were owed, and here's how much they received and got paid. It was up to them to come to the credit bureau and give it to them. Urgent has now put ownership into the small business owner's hands. It's my data. Here's the credit that was extended to me. I consumed $4,000 worth of electricity last month. I had net 30 terms, and I paid it on the day it was due. Let that be a credit reference. Come to my file. 3 examples of those will establish a Dun & Bradstreet Paydex score, which then allows a contractor, for example, to be able to walk into Home Depot and open a business account in the name of their business where their employees can go in, purchase materials for the rest of the month, and they'll get an invoice to pay, as opposed to paying on that personal credit card every time and getting some Home Depot frequent flyer points. So that's sort of, some of the ways in which we're looking at, business activity signals. It lets us know that a business is still active, right? They're paying their bills, they're consuming. It might even give us signals of it's a growing business. They're starting to have some challenges. A manufacturer that's using less and less electricity every month, we have estimates of what their annual sales are. And that starts to become all different sorts of ways that the ingredients that go into the predictive score algorithms that we establish can be influenced by the data, right? The Urgent, it's now allowing a small business owner to say, I own D&B, please add this to my file. Sure.
This may be somewhat off topic. You're talking about if a company is starting to use less and less electricity, it's a hint that their business may be failing, but they might be switching to LEDs instead.
Correct.
Do you have any way of business going, hey, my electric bill's going down, but that's because we're being smart, not because we're going under?
Not yet. We're working together to try to identify those correlations, and then those types of use cases are going to come out where we say, well, we have to solve for that group.
Okay.
But that's exactly what we're starting to try to tackle.
Okay.
Great question.
All right, let's move on to Jeremy if we can. Oh, sorry.
Yeah, so what I wanted to do today is start off by, I guess, reintroducing Equifax. A lot of you guys know us as one of the 3 bureaus, especially in the U.S., and I wanted to sort of set the stage a little bit about in this area and how we're approaching this area. So I'll start off by saying we're in 24 countries. So we are Latin America, Europe, Australia, New Zealand, Russia, India, those areas. And in addition to the credit data, which you guys know us for and what's at our core, we also have information on businesses. We have the ability to link consumers to those businesses. We get data reported to us from employers on their employee wage information, payroll information. We have access to telco, utility, payment information. So how are you paying your accounts, similar to the credit file. We are, through partnerships, we get access to property data, vehicle sales and service information. And so as a company, we're really striving to find all those data points about consumers and small businesses that will give us insights into what they're trying to achieve from a financial perspective. And that could be buying a home, it could be buying an auto, it could be getting a cable package, it could be a number of different things. And why do we want to do that? And so essentially, it really talks to our motto, which is we're really trying to help people live their financial best. And so what does that entail? That really entails connecting consumers and businesses to financial vehicles and lenders at the right time for the right product, at the right offer and the right price, so that we're mitigating risk for the lenders, but we're getting the best price available for the consumer so that they can achieve what they're trying to achieve. So in the alternative finance space, so how do we do this? And again, we're applying that same strategy. Again, we start with, let's find the consumers who tend to do alternative financing. So, find those small businesses that would tend to do alternative financing. What do those people look like? Let's connect them to the appropriate lenders or vehicles for those services. Once we've done that, let's verify to make sure that they are who they say they are, right? Which is very, very important, specifically on online lending and things of that nature where you don't have that face-to-face perspective. How do we get them approved faster, better customer experience, less friction in going through the process? And again, how do we ensure that we're using all the right data and all the right views of that consumer or small business to ensure that they're getting the price for the lender such that they can account for the risk, but also we want to give the consumer or the small business a competitive price, because it doesn't do any good to price for risk and then have the consumer or business walk away because they can get a better rate somewhere else. And so having better tools, better data to do that evaluation then allows you to be able to appropriately price and underwrite the consumer and small business so that you're meeting both your business need and the consumer's need as well. So one specific example of how we're doing this is our newly launched Insight Score for personal loans. And so what we've done is we've actually co-innovated on the solution where we have worked with alternative financiers. We've worked with those peer-to-peer lenders and credit union lenders, and where it's not the traditional large nationals, if you will, that play heavily in the space. And so we've taken that co-innovation. We've evaluated the existing tools that were in the marketplace. So in the previous presentation, we talked about VantageScore, we talked about FICO, and we've done evaluation on those tools to then to understand that the way they're built, they don't really meet the needs of this marketplace. These consumers are very specific. They're different from people who are opening mortgages, for example, or autos in a lot of cases. And so we want to be able to build something that's specific for this product for these type of consumers. So then we take that and then we then marry that with the data, right? So again, we're still talking about the FCRA world like you heard in the presentation before. So we're leveraging things like credit data. We're leveraging our telco utility exchange information to be able to bring in consumers that may not have traditional credit files. We're also expanding into looking at trended data. So instead of just looking at that static snapshot of what a consumer looks like, well, what have they been doing for the past 12 months? Maybe they're on an upward trajectory, and that's different from what I just see here today. And I want to treat them differently because their path is upward, and I want to treat them that way. We look at interactive attributes, which is just our fancy way of saying we take machine learning and AI to look at the core data and develop new attributes that would then be more indicative of the behavior versus sort of the traditional subjective business-related type of attributes. And then finally, we're leveraging our machine learning, our patented machine learning modeling methodology to drive the most value out of the data to produce the most predictive score. And then, as was mentioned earlier, we did acquire DataX last year. Again, this is really an example of our pursuit of getting extra dimensions, getting more consumers that we have data on so that we can then get them into the lending and the credit environment. I guess yesterday we announced acquisition of PayNet. So on the commercial side, adding lease data to the traditional financial and non-financial data that we have today. So really just kind of want to lay this out as an example of, we're in constant pursuit, whether it's through acquisition or through partnerships like companies like Urginet, of finding all the data points of why a consumer is transacting, why they want to do the business, why they might or might not make those payments. And so credit data is the core because that shows behavioral patterns and intent. But we recognize that there's a lot more dimensions that actually go into that. And to have a robust solution going forward, we need to make sure that we're incorporating that.
Great. Thanks, Jeremy. All right, Nippon?
All right, so I thought I'd start with I think folks have a very sort of wide definition of what the alternative lending marketplace looks like, right? And the way I think about it is, if you think it's just underbanked, unbanked, I think it's much, much broader, right? It's also people who are in existing banking relationships who are tired of the arduous processes, the long timelines, et cetera. And so the way we think about sort of our approach at Kabbage, it is very much leveraging the power of data, more specifically real-time and persistently connected data, to really streamline that underwriting process. And so what do I really mean by that? And I guess if you start comparing it to the traditional sort of banking view, right? So if I go into a bank, I'm required to provide documents, right? I'm required to tell a lot about myself as a small business to this other institution for them to lend. The difference in sort of what I'm asking for at Kabbage is very much permission and access, right? So the analogy I always use is the way I think about the data and the way I think about underwriting is, if I were to walk into someone's store, right, and if I could see what's going on in their cash register, right, if I could see what's on their shelves, if I could see their incoming inventory, really by leveraging a lot of this sort of persistent data, it gives me a much better, more intimate understanding of that business. The persistent perspective of it, I think, is a whole nother aspect of this idea that I'm lessening the risk of any one decision. By having that data persistently be updated and what have you, I'm able to constantly sort of update my decisions. So as businesses start to grow, I'm able to grow with them. As businesses start to shrink, I'm able to more effectively manage my credit book, right? And so that's sort of the point there. And so I think there's been a lot of good examples of what we mean by alternative data so far, right? And a lot of it, I think we've heard today, it sits very much in sort of that credit bureau aspect. As you see up there, we've had the TransUnion, Equifax, Experian. Over the course of the last year, we've input DNB as well. But the way we think about it is really across a multitude of different areas, right? It's what are the data sources that I, as a business owner, use on a day-to-day basis to operate my business? I don't want it to think of a credit application. I want to think of it as, hey, I'm just connecting the data sources that I use on a day-to-day basis. So it might be the payment processors that they're using, the PayPals and the Stripes of the world. As you start getting very, very verticalized, you start to see the things like the online retailers, and that's very much where Kabbage started, the eBays, the Amazons of the world. But you can also start thinking about things like restaurants, right? And using something like an open table or one of the like POS systems that sit there. The business management tools, I know we alluded to sort of the Facebooks of the world, and I 100% agree that as we look for any one of these data sources, you're looking for immutable types of data, right, where there's not a lot of ability for the customer to edit that data. And this is where I think it's very unique and very sort of difficult in the small business space, because I'm looking for very different types of data. So I'll use the Facebook example of, if I operate my Facebook page for my business, the things I'm looking for are not all that different from a traditional credit underwriter, right? It's a lot of customer engagement. It's the same way if, as a traditional underwriter decades ago, would walk into a store and see how many people are coming and going, how people are interacting with those customers. You're able to proxy a lot of that similar sort of information, right? And then also, and I think very sort of becoming pervasive as sort of a non-alternative data source is the checking account, really building out a cash flow based underwriting model, not by just old bank statements that are 1 or 2 years, or financial statements that are 1 or 2 years old, or just the last 3 months of bank statements. Given the use of APIs, given the use of just better technology, we're able to constantly start getting that data and just make better informed decisions, right? And so I think a lot to what we were just talking about before, in terms of how we use this from a credit risk underwriting perspective, it is sort of that multi-data component. The fact that I'm able to put bank data next to the data I'm getting from DNB, the data I'm getting from Experian, the revenue and transaction information I'm seeing from someone's payment processor. All of those items in coordination drive a lot of the same things we saw on the board earlier in terms of improved KS scores, improved AUC, all of that sort of stuff. And similarly, also being able to open up to a broader base of credit. That same sort of matrix we saw, that's very much how we operate in action today, right? Where I'm able to take something like a traditional credit score and really sort of integrate and open up to a broader base of borrowers because of the use of all of this alternative data. Yeah, please.
So Dun & Bradstreet's had 5 presidents over the history that's worked for us. Abe Lincoln was one of them, and he was a reporter that would go door to door. And what's interesting, and your comments just made me think of the fact that alternate data was actually a very big part of the credit process back in the day. And what happened is our desire to scale and be more efficient and have things be faster led to, can you just issue a score and quantify this thing, and then I'm going to become wholly dependent on the score so I can give quick yes, nos. And now the definition is getting broader again as we want to expand it. And we actually have a ledger in our museum where he went into a store and he said, the shelves are stocked, plenty of customers in the store, business is booming. However, the owner has a drinking and a gambling problem. So while the business is doing just fine, it could shut down overnight.
Yeah, that's right. Exactly right. You see it cyclical, right? You went from very hyper-personalized to broad swaths. And what we're trying to do with all this data is get rid of the process inefficiencies with sort of personalization, but still deliver that same sort of, I should know you as a borrower versus you, because there's enough individual attributes that I should be able to make a different decision if needed. In terms of results, really quickly ending up here and sort of our roadmap. So as I mentioned, we started with very much to sort of your online retailers because it was a great use case of, can I leverage alternative data to make a credit decision and an offer, right? Leveraging how you're just selling on eBay, right? Over time, we've been able to, by using additional data sources and having the ability to leverage checking accounts, move into brick and mortars as well. A lot of the processes and sort of products we've come up with, we've been able to expand those internationally with our bank partnership programs. Within the US itself, lifetime to date, that number is actually now 7 billion as of Q1. And again, it just resonates really well with the customers as you get them in, right? Over 170,000 customers, and the product itself just encourages reuse, right? Because we're able, like I mentioned before, we're able to grow with you as a business, and as you start doing more and you start using these working capital loans, and the more data you connect, we're able to really deliver an amazing customer experience as well.
Great. Well, thanks to all the panelists. We've got a few minutes left on the clock for some Q&A. If you have any questions. Mr. Becker.
This will be a jump ball, so either of you can answer this question, but part of what UrgentNet has done over time is continue to expand the types of data sources that we're providing. Started with electricity and gas, added waste and water, and then telco and cable. What other data sources would you want from us that would really be pivotal in your businesses? Is there anything that comes to mind?
Business checking accounts, incoming receipts, the cash flow.
Yeah. I'd echo what Harry said. Is I think I guess from my perspective, coming from an analytics world, the golden egg, if you will, is that transactional data and insight into whether it's from a business side or a consumer side, that cash flow.
I guess the one thing I'd say is because we are able to use it, and we use it very, very extensively in our models, I think, and you guys keep me honest here, we are not a credit reporting agency, so we have a lot more flexibility in the types of things we can do with it.
Kind of linking together something that Harry said and something that Jeremy said, you mentioned how UrgentNet has kind of created a new way of thinking about utility data where the customer owns it, and Jeremy mentioned how a lot of the data that you're getting are being reported by employers or businesses, et cetera. So how do you actually get that utility data into the credit files? Does the customer have to kind of proactively request it, or how does that?
In our case, yes, the customer comes in and proactively requests it.
Yeah, I think it's sort of mixed, right? So some of the data we get that's similar to what UrgentNet is getting, we get reported to us. So in that sense, it funnels directly into a credit score, for example. A lot of the data that Urginet is getting, if you think about who they're getting it from or who they're enabling to get it from, it's just not physically possible for one entity to go to each institution and say, hey, I need you to report this data so that we can collect it. And so the other alternative is that consumer consent data. And I think there will be variations to that, right? So there'll be, I don't think one size fits all for any one even given data source. So in some cases, a consumer might be okay of saying, hey, look, I want you to add this to my credit file so that you keep it and it goes on. In other cases, they might say, I only really want you to use it for the intent that I want you to use it, and then I want it to go away. And so we have to be flexible and to be able to account for both of those.
Yeah, to kind of elaborate on that, that's the business that eCredible's in. I mean, we're working directly with that end user to get their permission to access their phone, internet, utility accounts so that we can use it for different use cases. There will be use cases where they want it permanently and ongoing recorded in their credit file, just like any other piece of information. But there will be other use cases where it's a one time and throw away kind of experience and it's kind of dependent upon what the lender wants to do. So we just want to be the middleman to facilitate that and make sure that we can take the data from Urginet and put it and make sure that it meets the requirements that the bureaus have, because the bureaus live in a highly regulated environment, and so you have to be able to deal with all those requirements.
All right, thanks
Great.
again, Steve, and thanks, panelists.
Thank you, thank you.